Hello, everyone, and welcome to today's webinar, which is on effective anti-corruption training strategies for global corporate operations. My name is Matt Godson. I am co-CEO with Momentum Events, and it's my great pleasure to introduce and welcome you to this webinar and introduce you to our two presenters today. Our first presenter is Daniel Sandmann, the Head of Compliance Policy Communications and Regulatory Affairs Group with Allianz SE. Daniel joined Allianz SE in June 2010 as Senior Counsel responsible for compliance, policy communications, and regulatory affairs. His role covers strategic development of the compliance function, compliance training, culture, and communications, as well as all aspects of regulatory compliance, including the lead of the sales compliance program, Solvency II implementation for compliance, and other aspects of prudential and securities regulation for compliance. He's a frequent speaker at international compliance conferences and a lecturer on compliance at the University of Augsburg. He's joined by Don Hughes, who is the Vice President and General Counsel, EMEA of Hitachi Data Systems. Don is that Vice President, and he's responsible for legal affairs in the EMEA region and for managing the company's team of lawyers in Europe, Russia, and South Africa. Prior to Hitachi, Don was Deputy Head of Legal at Cable & Wireless, having joined Cable & Wireless for Clifford Chance. Our first presenter is going to be Daniel, and I'm going to pass the presenter role over to him. The presenters have asked me to mention that the IP presented in this presentation is either the property of the presenting companies or the referenced third parties. There will be an opportunity for Q&A. If anybody has any questions, you can note them in the chat box, which is on this page, and I will be presenting a dial-in number, which will be for Q&A post-event. So with that being said, it's my great pleasure to hand over the reins to Daniel for the first part of this presentation. Daniel, over to you.
Thank you, Matt. Well, welcome everybody to this webinar by Momentum. I'm very glad that you joined. Today we will talk about effective training strategies for multinational global corporations, and I will actually focus a little bit on what we want to achieve with training, so not focusing only at the technical dimension of compliance trainings, but looking at the culture and the changes in culture we want to achieve with our training and communication strategies. So talking about culture, before we start into looking what Allianz does and what our exposure is, it is very important for us, and we are doing that not only self-driven, but we are also driven by regulation. This is a short copy out of global standard by the International Association of Insurance Supervisors, and they simply ask insurance companies, global insurance companies, to sustain a corporate culture of compliance and integrity. And the items we are going to discuss today are actually the key items how to achieve that. Part of that is an adequate risk culture. My colleague Don will cover the risk aspects a little later, but we will focus on those with regard to specific topics such as whistleblowing also later on in this presentation. First of all, talking a little bit about our company, because that's always the starting point. We say in terms of compliance, we are still on a journey. Allianz, you know, as a global insurance company, we are insuring most of the Forbes international companies. We are one of the largest property and casualty insurers, covering things like big infrastructure projects, dams, power plants, even satellites, whatever you have, and spaceships. But of course, we often provide also classical life insurance, health insurance, and so on. Besides the insurance business, we run significant asset management activities. So one of our asset management companies is PIMCO. Many of you will know that. And we also have banking activities. In all our business, we have significant exposure to businesses related to government officials. So when we talk about anti-corruption issues, this is definitely something where we see high risk. We also have to see that we are quite international in terms of our employees. This is what you see here. So we definitely have kind of a heavyweight relationship to most of the European countries, but we are also around the globe, presented in more than 70 markets and countries with over 140,000 employees around the globe. As a compliance function, we deal with all aspects of compliance, so starting from advising the business, preventing, we run a big detection program with a dedicated investigation team, and we do, which is not always common, a lot of advocacy, which means we deal with regulators. That's sometimes specific for the financial industry, and it's part of my role that we simply maintain a good relationship and that we also monitor what is going on in the regulatory world. And that's also important when it comes to the topic of compliance culture and compliance training, because actually a lot of trust and a lot of confidence is set by regulators into the compliance communication strategies and the creation of a culture of integrity, as we call it, because they saw only with regulation you cannot cure a market which has shown significant weaknesses in the financial crisis. Our focus areas and the topics we are covering, given that we are a financial services company, are quite broad. So we are covering a lot of topics, starting from classical items such as money laundering and international embargoes and sanctions. We have the financial services regulatory stuff. As a big listed company, we have a lot of capital markets issues, so the obligations coming onto us as a listed issuer of shares and debt instruments. We have, of course, employee reporting, which is nothing else than what you call whistleblowing, a big anti-corruption, anti-fraud program, and something I'm covering as well as called sales practices. So this is that we deal fairly with our customers and investors in our financial instruments. We are doing that from the holding Allianz SE. This is the holding of the entire group based in Munich, and we are working with a big network of compliance officers. So everything we produce in terms of training and communication strategies is actually then rolled out via those structures, no matter whether those are in the matrix organization regions, global business lines, or major OEs, and they are also our counterparts when we agree on content and on our products, because that's to some extent also a cultural issue. If you have training which is produced only with an eye to a specific region or to a specific business line, or if there's too much emphasis on aspects of a significant business line, then we know that the acceptance in many other countries might actually suffer. The cultures differ significantly when it comes to rolling out compliance training. The acceptance of certain things in mainland Europe is totally different from Asian countries, from the US, and so on. Many of you are experienced and seasoned compliance colleagues and will be familiar with that, but this is the way how we ensure that all aspects and how all cultural views are also reflected when we produce our trainings. Looking at what we have in terms of, first of all, training administration, but also in terms of looking at concrete training products, it may be interesting for you how we group our hierarchy of training methods, because for us it is very important to have different buckets and different qualities of training. Everyone is aware of the typical compliance online trainings. We think it is important to have them because they are easily allowing to reach a larger audience, but we also think there's more efficient means when it comes to sustained training success. So how you make sure that people remember what you have discussed with them. We also think that it's very important that you have a means of interaction with the audience so that you get feedback and that the audience meets the compliance staff, because by that you only create a relationship towards the compliance colleagues, and this is actually key for the long-term success. Otherwise, people might recall that they did that compliance course once and what was actually the subject of that course, but they hardly know whom to call if they actually have an issue. So that is very important. And for that, we have created this hierarchy, simply saying, okay, at the tip, we have the one-to-one trainings. I will focus on who's actually receiving those trainings in a minute, but they are the tip of the pyramid, of course, very causing a lot of effort in order to roll that out, and usually limited to senior management staff. We then have classroom trainings for broader audience in terms of learning psychology. This is one of the more efficient means. And then we have web-based trainings and other distant learning methods, so including webinars as the one you are attending today. This is one means for us as well. And as the underlying pillar, we also have the so-called targeted email communication. That's especially relevant for topics which pop up ad hoc. So we sometimes face the situation that there are significant regulatory changes, especially, for example, on the topic of embargoes, where then the UN Security Council takes a decision and we have to inform 100,000 of our employees. And for that, targeted email communication is key, because you can make sure that only those people who are really affected receive the information, but that they have good means and an easy means to actually get in touch with those colleagues within 1 or 2 days in order to react to those changes. Now, I mentioned that we pretty much look at target groups. This is how you see our internal grouping. That sometimes differs from topic to topic, but generally speaking, of course, we have trainings for our board level and for other senior management level, and then we define it for our typical topics. So front tone at the top training, anti-corruption, anti-fraud training, money laundering training, and so on. And we specify by what we call the compliance training levels, what is the frequency and what is the ideal method, because we are not prescriptive in terms of asking every of our subsidiaries to do exactly what we tell them to do, but we are allowing some discretion. But we only want to make sure that, for example, when it comes to an important topic, such as here tone at the top, we make sure that there is a minimum duration of the training and that there is a minimum repetition cycle. So in case of that compliance training level 3, that would mean you have an in-person training which allows interaction. It should be at least 40 minutes and it should be repeated every 2 years. If we look at level 1, that might also be an online training with a repetition cycle of 2 to 3 years and can have a duration of 20 minutes roundabout. Other training groups, of course, include middle management. A lot of thought has been spent over the last years on tone from the middle, so that's a typical item as well. Then we have dedicated exposure groups. Then if our hosts today allow, we have something we call momentum groups that I will cover in a minute as well. That's coincidentally. And we have specific trainers for new joiners, as this is the case in many other corporations. The momentum groups I mentioned before are persons which are in a specific change situation. What I have here is something from a benchmarking organization some of you might know. We see, if we look at the chart here, that there is first of all a certain level of integrity which is changing over time. And this is the chart here. If you see that integrity levels are changing, this is very much depending on the style of your company and how your company actually deals with its employees. And we see that employees and companies which are able to maintain a very high level of integrity, so this is here the upper chart, have really also better outcomes when it comes to business results. So that's a very good argument for compliance training and for intensive compliance trainings. While companies where the employees' perception of the integrity goes down, we also see that actually business outcome goes down. So that's a key aspect. And in order to make sure that people who are on board for quite a while are trained specifically to their situation, we are creating those momentum groups. Those are often people who are promoted into a new role. That might be also people who are in kind of challenging environments, for example, in M&A situations or when there are revirements in companies ongoing. And for them, we provide specific training, especially case studies, which allow them to play, for example, the role of an investigator or to play the role of a compliance officer. One of our case studies I actually brought here to share with you. The training ambition here is to actually create transparency on compliance methods. For us, this is very important that compliance is not perceived as the function which is the kind of internal policeman. So we try to create transparency, for example, when we would start an internal investigation and how such an investigation is conducted. We are sharing that with people. We are, of course, not sharing every little detail and every strategic aspect, but that they have some basic understanding, because we want to avoid that people see hurdles when talking to compliance because they think an investigation which then might be triggered is something bad. That's also very important for our whistleblowing culture. And the case we create here is something where actually the trained people have to get in the role of a compliance person, which is sent for an investigation into one of our subsidiaries, a virtual subsidiary, of course. And they have to start investigating, and they actually can do that in reality and find certain profiles we have created in social media platforms. This allows them then to see connections between some of the alleged perpetrators in that investigation, and by that solve the case. And this has proven to be very successful because people like the idea of doing a little bit research and doing that kind of open source analysis. And this has proven to be very successful and very well-liked case when it comes to those momentum trainings. Talking a little bit broader beyond the scope of compliance training, we of course have various methods of communication. We are trying to use as much as possible cases, and also cases where we were able to contribute to the economic benefit of the company. This is an animated PowerPoint slide where we simply inform people about a fraud system which was going on in some European countries, especially in France. It has been very big. Fraudsters actually called senior executives, not only in our company but also in other companies, and pretended themselves to be Allianz executives, and they try to get money transfers quite urgently. So they increase pressure, or they exercise pressure on some of the senior executives in order to actually get money transfers, and we were able to stop that by a global fraud warning very quickly, and that actually saved a lot of money. We saw cases in other companies later on where they have been successful, and with that scheme, more than 30 million euros have been actually perpetrated by those fraudsters. So there are different ways of communication. This was just one example for an ad hoc information. This is something we use if there's a high level of urgency. If we sometimes know, okay, we only have preliminary results for this fraud scheme, we didn't know all the details when we came out with that communication, and we have some kind of black boxes, meaning, okay, we have to deal with a certain level of uncertainty. We cannot respond to every question because, again, we don't have necessarily all the details, or we cannot share every detail we have. On the other hand, we then have more regular reporting. That's also very important when it comes to compliance communication. Again, transparency is key here. Usually the recipients are not the broader trained employees, but usually it's about senior management, so that you simply know, okay, this is something we are also dealing with. Advice, you saw that in our mission statement, is of course the key aspect when it comes to broader compliance communication, but for effective strategies it's very key, because by that you can establish compliance as an appreciated advisory function, and people easily get to you, approach you in the compliance function in order to get advice, and by that you learn a lot about things going on in the business, in your company, and so on. External communication is something we are also fostering, so that's quite important, because in the end, when we talk about culture of compliance, it's not limited to the company itself. It's very much related to media, supervisors, prosecutors, of course also the companies we deal with, so our customers, our vendors, and our distributors. So external communication is getting more and more important. Now, looking a little bit on a specific topic I mentioned earlier, so something on whistleblowing culture, because this is a very overarching topic that we have a good speak-up culture as part of our compliance culture. We have different means how to communicate that. This is a screenshot from our last year's Anti-Corruption Day communication campaign. And we want to make sure for whistleblowers, for example, that there is a certain culture, how things are actually being dealt with and how feedback is given to whistleblowers, but also how the aspects of whistleblowing are seen within the company. And this is about what we call the 4R approach. So it's about recognition of the quality and the relevance of whistleblowing. It's about respect when it comes to whistleblowing, and it's about the reality in your company, especially when it comes to investigations or audits which are triggered by whistleblowing, that you simply say, okay, we are here also playing along the rules. People see that the methods we are using are in line with what you would expect from, let's say, a public prosecutor, and that also the whistleblowers get some positive reward, not necessarily in terms of monetary benefits, but that he gets the feedback that he has become part of the changes triggered by his whistleblowing once this is founded. For communication strategies and compliance training strategies, of course, we all know it's not only about doing good things, it's about being able to prove that you have done them. So assessing actually your culture and assessing the effectiveness of your training is a very important aspect. We are relying on two pillars here. One is, of course, the typical evaluation. You know, for trainings, it is very important that you have something we call here the Likert scale, or organizational psychologists also call the Likert scale. So you have a larger scale. In this example, it's with 5 various grades. Actually, we use a 10 rated scale, which allows people to really say, okay, after that training, I have really additional benefit. I've learned something which is helpful for my job, and they can, with every nuance, decide on whether this training was helpful for them. Because if you only look at training graduation results, if you only look at the percentage of the target audience you have trained, that might give you a wrong impression, because successful training, from our point of view, does not only depend on people graduating from a course, doing a training or attending a classroom session, but it's about people remembering the key topics and the key content, and that people get out of the training with a positive memory of the training. So making sure there's been a good sense of humor, making sure that, again, they recall the names and the faces of the compliance people they were in touch with, and so on. For us, it's therefore the basis of our compliance program, or as we say, we have, if we use that cappuccino example, or latte macchiato example, actually. So we are saying good compliance programs are 25% the policies, but actually 75% is about the communication and training when it comes to those policies. And I would like to now share some examples with you to give you a more direct flavor of trainings we are using. Of course, here, given that format of the webinar, we can only limit it to the various online trainings. So a trend we have been using more and more is actually gamification, and one of the earliest compliance games we did was for our code of conduct. Actually, we are not using the soccer pictures too much anymore, but many of you, who, at least those who are into soccer, know the Allianz Arena and the more and more Allianz Arena, which are currently created in France, in Brazil, and so on. And so for us, it was a very important picture and metaphor that compliance plays a little bit the role of the referee, and so we have been using those symbols for the training, and it's actually about a short game where the employee can play against compliance and by that run through the content of the code of conduct. It's quite simple. You click on the relevant topic, which is covered in the code of conduct. You are asked a question, and then you get your direct feedback. That's one means. And once you know that you have responded right, you score. I've started that a little earlier. If you are not clicking on the correct response, the Allianz compliance team scores. That's just one example. We see more modern examples. I can show you one which is a privacy training, which is provided by an outside company. That's actually a state-of-the-art game, and people love to do that. They are available for many of the typical compliance topics. So this is here a game on data privacy. People have to investigate, or the employee has to investigate, actually against the clock, a kind of data leakage in a company. And so persons are running around in a virtual company and are actually investigating, interviewing people, and are asking for red flags. And once you detect as an employee the red flag, you have to decide, is that a breach of our internal policies? The policies are embedded in the program, so employees have to read them first, and then they have to look at things and simply say, okay, this is in line with our policy, or this is not. This is against our policy. And by that, you see it here, they score, and only if they score, they are allowed to ask the next question, and they can also walk around in the offices. Here, they can look at the PC, they can look at various items later on in order to do this small virtual investigation. So a very nice example for a game, and actually people are really loving that to do it that way. So that's one of the most innovative ways we see. We cannot use it for every topic and in every environment, also to do some IT limitations. That's actually something you also have to bear in mind in global corporations, at least in those where you don't have a very homogeneous IT environment. Many ways of online trainings are limited actually then by IT constraints. With that, actually, I would like to close now and hand over to my colleague Don Hughes, who's sharing a little bit on the risk strategy and risk topics on compliance trainings. Thank you all for your attention, and Don, please go ahead.
Thank you, Daniel. I thought that was a very interesting presentation. I particularly like the football game. Now, Daniel has given us a broad view of how Allianz conducts training to ensure compliance. Now, I'm hoping to look at particular risks as I see them for our company and for any international company, and look and show you how we train in respect of those risks. So before doing that, I think it's worth just setting out a little bit about what we do at Hitachi and at Hitachi Data Systems so that everything can be put into context. So Hitachi Limited, of course, is a Japanese company. It's a company which is much like GE of the US or Siemens of Germany. So it actually manufactures, I believe, about 22,000 products, from building of power stations, nuclear power stations, building of trains, including the bullet train, as shown in this photograph, down to micro semiconductors. Now, in terms of Hitachi Data Systems, basically we sell all of the computer equipment that Hitachi manufactures. And it's not the kind of computer equipment that consumers would use, it's the computer equipment that enterprise customers would use. And I've highlighted 2 points here about the company which I think are particularly pertinent for what we will be talking about today. And that's the fact that we conduct business direct channels, and we do that in over 170 countries, and we sell to both private and public customers. And that has a big influence in the training that we do. Now, I think a lot of people, hopefully on this call, will be familiar with this map of the world. And of course, it is the world as seen by Transparency International. And this drives a lot of our training that we do and where we do the training. So if you look at the map, it's of no surprise that the countries which are seen as the cleanest in the world to do business, scoring close to 100 out of 100, are Denmark, Finland and New Zealand, who each occupy a top place with a score of 90. And at the bottom, a joint 174th, are Afghanistan, North Korea and Somalia. And they score a massive 8 out of 100. Now, we don't do business in countries such as those, but we do business in places like the Ukraine, which scores 26 out of 100, Nigeria scoring 27 out of 100, Russia, which scores 28 out of 100, and Kazakhstan, which scores 28 out of 100. Now, that does drive our training and where we try to do the training, particularly the face-to-face training of employees, and our partners. And basically, we look in terms of where we do our face-to-face training, we assess the risk, and we look at Transparency International's map. We look at our revenues in a particular country. We look at the number of employees in a particular country, whether we've got a direct or indirect workforce, and we look at the number of partners that we employ in those countries. So I thought this was a particularly interesting survey which I saw recently from Winston Strawn. And basically, they spoke to a number of executives in companies around the world and asked these executives and, in fact, legal officers where they thought the risks lay in where they did business. And as you can see here, there were 3 particular risks that were identified. Firstly, the geographic location in which the company operates. Secondly, third parties and associates acting on their behalf. And thirdly, rogue employees. So again, that is a big factor in where we choose to do our training and whether we do it face to face. Now, there was a second slide in Winston and Strawn's survey which I thought was particularly interesting, which part of the business these executives and legal guys thought was most susceptible to the threat of bribery and corruption. As you can see, as we would expect, sales is the biggest risk, or perceived to be the biggest risk, with at 37%, with lower to mid-level managers coming in at 20%. Now, this is a slide which was actually on the BBC website, which featured a story about, again, corruption around the world. And these are basically all euphemisms for corruption. And it starts with cash for soup, which is apparently a Turkish expression for what you may be asked for, because soup is something which is often eaten at the end of the night, and so a police officer may ask for cash for soup. So, according to this BBC website, fish start to stink at the head suggests that if there's corruption at the bottom of an organisation, then there's probably corruption at the top. Just going through the list there, a euphemism which seems very popular for bribery and corruption seems to be tea and coffee, and being asked for money for tea and coffee. A Nokia box, I believe, was a case in Hungary in relation to somebody or a public official that was caught bribing, and he handed over the money in an empty Nokia box, which then became almost a unit of currency for corruption. And again, a story about Little Carp, which was apparently code word for corruption for fixing football matches. So, in terms of what this means to us, and what this means to our business. Listed here are some criteria that were identified from a case in the US under the FCPA, one of the big, or the first big cases under the FCPA, which was called Caremark International back in '96. And this identified what companies should look for in terms of corruption and how they should prevent it. And as we can see, tone at the top, Daniel identified that in a couple of his slides in terms of being very crucial in terms of an organisation, training constantly, and that's what we're talking about today. And of course, you have to train in all of these aspects, whether it's corporate policy, whether it's your code of ethics and business conduct, how you manage risk, and the use of partners. And in terms of when we conduct training, we see that there are two major concerns for our business and indeed for any businesses that operate internationally, and that is use of partners and gifts and hospitality. So first of all, if we look at use of partners, I think it's a statistic I saw that 75% of FCPA cases have involved bribery involving a third-party intermediary in some form or other. And listed here is, I've listed down some cases which have involved intermediaries, and some of these are very well-known cases. So we can see these third-party intermediaries have been either joint venture entities, they've been distributors, they've been agents, they've been consultants. And in fact, when I was putting these slides together a while ago, I actually found that there were a lot more cases. And what surprised me was the number of cases, and I've listed a few more there. So for us, it's crucial to go out and both train employees and train partners. And what we think is crucial is to train employees in the fact that use of partners in these countries can be a huge risk in these particular countries. So what we train our employees on firstly is how to do due diligence on partners. And what we say to them is it's clear that the burden of ensuring that we do business with ethical partners rests with us. There are no real guidelines either from the US government under the FCPA or from the Ministry of Justice in the UK. But we know that the amount of due diligence that we do should be reasonable and sufficient based upon the country in which we're doing business. But we need to protect the company without putting an unnecessary burden on the business of the company. So of course, our finance department will do due diligence on the history and finances of the partner. But then what we do to the local business is we tell them how they should be doing, or we train them in how they should be doing due diligence. So primarily we follow Transparency International CPI Index to determine the level of due diligence we undertake on our partners. So partners who operate in a country where the CPI score is 5.1 or below will be expected to undergo the highest level of due diligence. Partners who operate in a country where the CPI index score is 5.2 and above will be expected to undergo a light level of due diligence. And partners who operate in a country which does very well, such as those we highlighted earlier, Denmark, Finland and New Zealand, they may be exempt from due diligence completely, save for that required by their business and finance departments. So our light due diligence report investigates these matters here, including the partner's current business record. We look at the subsidiaries and affiliates of the company, the board members of the company. We do online searches. We look at watch lists. Now, the in-depth due diligence report that we do, that covers everything that is covered by the light due diligence report, but it also looks at the litigation history. We do a discrete visit to the operational address of the partner. We endeavour to identify this ongoing or past relationships with the government or state-owned entity. We do some limited interviews. And our Global Trade Compliance Department also does some checks against the MK denial list. And they do this before signing up a partner. And they look at where products will be shipped to, because primarily Hitachi is a company that sells products, and we do sell solutions and services also. Now, the important part about training our local businesses is that we make it clear that it is the responsibility of the relevant business to analyse the due diligence report and to report any red flags to finance or to the legal department, and it is their responsibility to make a business judgment on whether this is a company in which Hitachi should be doing business with. So when we go and do our training, we take them through what a due diligence report should look like, and we tell them how they should react if they see any red flags in that report. Now, often a report, and for us we do this using a third-party provider, will highlight red flags and amber flags, and generally red flags can be difficult to remove for us to proceed. With amber flags, there's usually just some kind of a question that needs to be answered, and we expect the business to go away and do that. Now, these due diligence reports are audited, and the search forms that I referred to earlier for export control are also checked by our export control department, and we put obligations relating to the ongoing conduct of the partner into their contracts. So we go out to the field, we go to the businesses in those countries where we think there's a risk, and we train them in how to do this due diligence. And as I just said, we do the training. Now, so that's what I would identify as being a big risk to companies which are doing business internationally. The second risk, I believe, is the challenge of gifts and hospitality. So people think of bribes as being money in a brown envelope, which is offered to a person in a position of trust to retain business or to gain business or to gain an improper advantage. But of course, what we also need to train in is that we have to make our local businesses understand that a bribe is not just a payment of money in an envelope. It can be gifts, it can be travel and entertainment, it can be kickbacks, preferential treatment, unexplained rebates, payments for advertising or other disguised allowances or expenses. So what we like to do is go out to the field and we show them the bribes that companies have been prosecuted for. And there's always an element of surprise when we do this from our local business guys that these types of gifts and entertainment can be seen as bribes. So what's particularly interesting, I think, is the Lucent case, where Lucent were prosecuted for non-business related travel to company officials. We see in Daimler was internships to Chinese officials' family, payment for college tuition fees for control components, gift certificates and watches for Schnitzer Steel, gifts to Chinese telecom executives, watches, cameras and laptop computers. And again, we see at RAE Systems, including fur coats and kitchen appliances and business suits. So we take the local business guys through what is allowed under the FCPA and other similar laws such as the UK Bribery Act. And we show them that basically it's fine to go out and promote, demonstrate or explain our products and services, but any gifts and entertainment should be reasonable, they should not be extravagant or lavish, and most importantly there should be no appearance of impropriety. So they should be bona fide and made in good faith, and they should always be within our company policy, and importantly they should always be within the customer's company policy also. Now, of course, grease payments are officially allowed under the FCPA, but we don't allow facilitation payments under Hitachi Data Systems policy, and of course under the UK FCPA or the UK Bribery Act and other local laws, grease payments or facilitation payments are not allowed also. So again, we go out to and do the training, and we train our guys in terms of what they can do in terms of meals and travel, lodging and entertainment. And what we actually do is we teach them in terms of the limits for both gifts and for travel entertainment. Those limits are set per country, and we've used an external law firm to help us ensure that any limits per country comply with the FCPA, the UK Bribery Act, where it applies in any particular country, and also what may be relevant under that country's legislation. So examples of what might be allowed: domestic economy class airfare, domestic lodging, local transportation, reasonable meals at the meeting, and modest entertainment, such as 2-hour sightseeing tour. But we don't allow trips to Disneyland. We don't allow extravagant entertainment and extravagant gifts, and we give an example here of what might be seen as an extravagant gift. So putting a Hitachi logo will not allow executives to give these gifts. We don't allow gaming and gambling destinations or trips there too, and we don't allow these kind of entertainment in these kind of venues. So in terms of areas that provide issues with companies generally, and this is what we particularly point out in our training, we say that basically in terms of the FCPA, of course, we have to be very careful with visits by government customers, and what we do is we train in terms of how widely government customers can be interpreted, and that of course can include state-owned banks, nationalised industries, doctors, for instance, university employees. And so what we say is that in terms of trips to headquarters, for instance, we have to be careful in terms of family and relatives being invited. We have to be careful in terms of business class flights being requested, side trips as we discussed, use of a company aircraft if we had one, as it happens we don't, and also in terms of training. So this can be unregulated, is often hidden in a deal, booked through dubious travel agencies, normally to locations where there's no training need at all, and not. It has to be based around a curriculum, and it has to be based on where that training can take place, and not in countries which happen to have nice weather, good golf courses or shopping. Or we need to be careful of excessive meals that start at lunch and finish at midnight, expensive gifts shared at dinner, and trips to karaoke bars. Now, in some parts of the world, karaoke bars, as we understand it, can mean a lot more than karaoke as we would understand it. So we have to be very careful with that. So again, we train our employees to be careful in terms of what can be allowed and what can't be allowed, and we look at the agendas that they put together for their customers and make sure that they're primarily business trips. And what we try and ensure is that while it's fine to give away company logos such as this, which are just small, inexpensive gifts with a Hitachi logo attached, as I mentioned earlier, what we try and do is ensure that that doesn't go too far, and we don't have a marketing problem or program that's gone completely wrong. So we do mandatory training of both employees and resellers. We do it in person as far as we can and as far as our budget will allow, and we do online training of all employees when they start the company. Every 2 years they have to do online training courses again. And when we do the training, we try to tell them that to ensure they're not doing what's called a Mr. Peterson. And this is a guy who worked for Morgan Stanley, who was doing online training. And the allegation was that Mr. Peterson wasn't in fact doing the training that he was supposed to be doing, but he was attending telephonic sessions on the phone with his phone on mute and doing other things at the same time. And in fact, as we know, Morgan Stanley weren't prosecuted, but Mr. Peterson was. And I think that's a salutary lesson when you go out and train employees. So that's it from me. And on that note, I will hand back to our chair.
All right. Well, thank you very much, Don. Thank you very much, Daniel. I hope we didn't have very many kind of Mr. Petersons on this call. Obviously, this is a conference call as well. Now, before we hand over to the audio Q&A, I actually just had a couple of questions for both of you, Daniel and Don, which I wonder if you would be able to handle right now before we open it up. Daniel, and I thought that the presentations were really fantastic and complemented each other really nicely. The first question that I had for you, Daniel, was, have you found that one of your training methods has been more or less effective with any specific group or other? And I wonder if you could kind of share with us which groups you thought appealed or responded to which types of training most effectively?
So, of course, everyone loves those more, how should I put it, those trainings with a lot of interaction. The trainings where you have like the classical online training with a lot of text and so on, we used to have more of these in the past, very much legal language in there. They weren't, of course, perceived that nicely, but of course, you always have to distinguish the question whether a training is more entertaining from whether the content is really sustainable. And that's actually some of the downsides of the gamification trends, that people love to do the game, but if you ask them in the end how much they recall, it's not necessarily more than what you would see from a short classical training. So we wouldn't say there's much sustained compliance know-how, but of course it's easier for us to create acceptance for those trainings, so that's successful. In terms of specific target groups, I mean, they're all very responsive. We hardly see any group who says or who is more reluctant, or where we see less success with our trainings. Of course, the tone at the top trainings, they are rolled out as one-to-one sessions, very much about the role of senior management in the company and so on, are well perceived because those are also very open and frank discussions with the compliance officers.
Okay, that's great. Thank you very much. Don, a question for you. You mentioned in your presentation that you require partners to undergo training. How is it possible for you to monitor the actions and behaviors of those partners on an ongoing basis? Is there something you have in place to assist you with that?
That's a very good question, and of course it's much easier to monitor your employees' conduct than it is your partner's conduct. And I think that's part of the training that we do, particularly around training our employees. So we would train them in how to look for red flags. So we would say to them, we would give them examples of what we would consider to be a red flag, and we would expect them to spot that red flag and highlight it to us as necessary. But of course, what we do as well is we train our partners, and in reality, there's only so much you can do, and we go out and train our partners. We sign them up to wording in the contract. We monitor their behaviour as much as we can, particularly in the high-risk countries. But really, it's the people on the ground, our employees on the ground, that we would hope would pick up any issues and report them to us.
Fantastic, thank you. And my final question for both of you before we move to the audio Q&A, which is, having established training protocols at each of your respective companies, what's the one thing, if there is one thing, that you've learned throughout this process that you wish you'd known at the start of the process? Don, I'll pose that to you first.
Well, I think in terms of, it's not so much something that I wish I knew, but I think what surprises a lot of people when you seem to go out and give this training is the role of the third parties. And I've heard people say to me when I've done this, and I've spoken before on this subject, particularly around third parties, they didn't realise just how a company can be liable for the actions of their third parties. And that's what people have come up to me and said, I just didn't realise that you can be in as much trouble for your partner's actions as you can for your own actions.
Okay, that's interesting. Daniel, do you have anything?
I would actually share the view. I think it's the same across industries, and I think those are the basic thoughts we can also see, for example, in the FCPA and the UK Bribery Act. So I wouldn't add too much on that. We generally see that we must always allow some discretion also. We cannot expect everyone to do the same curriculum we are imposing on our employees. That's important, but generally I'm with Don.
Okay, that's fantastic. So for those of you that are watching this webinar, we now have on the screen the dial-in number and code for the live Q&A. We hope that you'll be able to join us then. Whether you are or you are not, I would like to extend my deep appreciation and thank you to Daniel and Don today for two excellent presentations, which I think complemented each other really, really nicely. I know there's a lot of effort that goes into this, so we certainly really appreciate it, and we look forward to hopefully some more Q&A on the audio. So with that being said, this concludes the audio-visual part of the presentation, and hopefully we'll see many of you on the call presently. Thank you.